Hi guys, Randy here. So last week we gave you a conversation that, as I told you, happened organically and as a result of JPS. Thank you very much, JPS, for inspiring something that we didn't expect to happen. So we were back and forth about whether or not we would give you part two this week or we'd wait a while because we have a couple of episodes that we want to share with you, we have a couple of voices that we want to share with you, a couple of ideas we want to share with you. But we decided against that based on just the initial response of that episode. One, I thought it was too long, and two, I was like, boy, I don't know if they like it, I don't know if the content is good enough. I don't know. I was worrying about whether or not the content is worth it. You know, if there's value there. And if there's value there to have somebody listen for 3 hours. Based on the response, also to the people online who have been making me know quite clearly that, hey, they just want to hear good content. They don't care about the time. Of course, that doesn't mean I'm going to batter you with 3 hours. So we made a decision last week to cut it in two and give you part one. So what you're about to hear is part two of that conversation. We decided to make sure that you didn't wait too long to get it. More gems in it. I thought there were a lot of gems in the last one when I listened to it. And listening to this part two lets me know there's even more gems. We go into more companies, actually pull up a couple of things and speak directly to them. I just think there's more value there, but I didn't want to give you 3 hours in one go. So this is part two of that. Now, if you haven't listened to that before, go back and listen to it, please. This might make more sense to you if you hear how we were coming in. So don't let this be the first part that you listen to. If you have listened to it already and you remember it clearly, then feel free to listen to this one. If not, you can listen to both of them one after the other if you're on like a nice long trip or a long flight or something. Hope you guys enjoy it. Let me know if you don't like it. Let me know if you do like it. You can tag us. I am at RTEuro on Twitter. You know, my co-host Danai is at HDanai. I should say at H and I can't do Danai's voice. Let me know. Let me know if you like it. And you can also follow us on Twitter at earnings_season. I'll say that again. At earnings_season. Hope you enjoyed this episode. Let me know if you do or if you don't. I'm always willing to hear. And yeah, enjoy.
PE. If you listen to any other analysts, you listen to people with common sense, Warren Buffett. You hear them talk about the PE of this company because it really frames how the profitability of this company relative to its share price, blah blah blah. If it's a good deal, so PE is applicable. I see you get some flack for saying it's only applicable. It's not applicable outside of industry.
Yeah. When it is designed.
When it's designed to
Right, in
normalize
nature, to normalize.
So put everything on the same level, so you can say, all right, if I were to buy that company, then then what I'm paying for the profits of that company is more or less than this company. And that's really it. If a dividend paying company and you have PE of 1, 2 dividend paying companies, they pay the same ratio of dividend related to the profit, 25%. But you buy one at a PE of 1 versus and the next one at a PE of 20. And you're looking for the dividend, which one you buying?
Yeah.
It's clear.
Yeah. Well, to us, it's clear. But maybe not, right?
Yeah. If what I like to put for PE, but specifically, I don't hear people talk about this. I don't think I came up with it, but I thought of it myself. I thought of it in a vacuum. I didn't hear the thought anywhere else. Because that's me, that's maths. From I look at a formula, equation, then I start thinking about how applicable it is beyond the normal application. Because PE is, we was trading 12-month PE. So the PE is the profit over the last 12 months of earnings that we've seen, right? So what we're looking at is the price relative to the profit, or the profit relative to the price.
Current price relative to the last 12 months profit.
12 months of profit, right?
Per share.
Per share.
Yeah.
So if you were to take a price of 20, right? And earnings per share is 40, right? No. Earnings per share is 5. Then you get a PE of price over earnings. So PE is 4, right? If you were to buy that company outright, like you buy the whole company, say Rich and I buy the whole company. If the company were to maintain that same profit every single year, it would take 4 years for you to get back your initial investment.
Okay.
So it takes 4 periods, which is the 12 months, 4 years to get back initial investment.
Mm-hmm.
So that's the amount of time the company pay. So any PE is the amount of time company takes to pay you back.
Exactly.
So why PE is good? So yeah, look at it like that, right?
Continue.
My price is 20 when I buy it at 20.
Mm-hmm.
If I have a good outlook on the company and I buy it at a price of 20 and a PE of 4,
mm-hmm.
my generally good outlook is that my good outlook
is that it's going to
the profits are increasing.
Okay.
So that if the profits are increasing, then the PE at the price I bought it for is falling.
Mm-hmm.
So it's taking less time than the 4 years I paid that I initially priced in to pay me back my initial investment.
Exactly, because it is rendering a company down from what its entire operations are and focusing on how does that company repay
shareholders, which is profit. That's how shareholders are repaid by profit. Because after I pay out every expense, I'm spending tax money, pay the workers, how much money left in the company for the owners of the company?
Is profit. Exactly.
Profit. And you're not buying a company because if you're buying a company and you feel good about the company, not feel good in terms of what it does for people, what it does for taxpayers, and what it does for Jamaica.
That's cool.
That's cool. But if you're buying a company for profit or to make money on this,
mm-hmm.
then PE informs a lot of that. And remember which is why Buffett speaks about PE.
Must.
More than once he said PE are this versus the PE are that.
Must.
And why Buffett actually often mentions that he has a lot of money at his disposal.
Really?
Yeah. You sit down and in Berkshire, he controls a lot of money. Sure.
Yes. Yeah.
Right? He's in the business of buying companies.
Correct.
Which is why PE is so great to him. Because
he starts out with his money,
mm-hmm.
and every decision that he makes, it hits all kind of value. But the thing that it drop back to is how much money is this going to turn back to me
mm-hmm.
as compared to the
mm-hmm.
money that I started
and with. A nice thing he always says, like I just said, he would like to buy any company he invests in outright.
Oh yeah, 100%. Oh. Yeah, of course.
So
if you
could I have the money to do it, and I like a company, I'm buying it outright.
Yeah.
I don't have the money to buy a LP side, sure. But Berkshire does it over and over. They buy whole companies, and they do invest pieces in companies that they would really like and would like to buy outright.
Correct.
So if you look at that, then that's so simple PE right there. Yeah. Because if Buffett said, all right, it's going to take me 4 years to get my money because the PE of 4, profits increasing.
Mm-hmm.
Buy it outright. I control the full profit of the company,
mm-hmm.
and my profits start increasing.
Anyway, exactly. So I'm reducing the time that it takes me to get back my investment. Yeah.
So he sees that value more than a lot of people.
Yep.
Sure, but PE is very applicable if I come to you with 2 companies to buy in outright,
mm-hmm.
one in the financial service industry and one in manufacturing.
Mm-hmm.
PE on fin is 20. PE on manufacturer is 10. Who you buying?
I can't buy PE alone, but
sure. Yeah, no. So given the outlook that profits are increasing, or profits will increase by the same amount over
everything else
is
years. Good for both those.
Both of them. Yeah. There's
which
nothing.
One am I buying? And prospects are the same. If the decision is rendered down to PE, mm-hmm. obviously I'm going to pick the shorter one. Yeah. Obviously. Yeah.
And so yes, I love PE, but we don't pick on PE alone.
Yeah, no.
So I need to clarify that because you said it, and because I know people will think it.
Well, I realize that a huge part of the problem too is just that, I like to fix the things that I can control. Mm-hmm. So I don't mind blaming myself, even if I don't truly think I'm wrong.
Yeah.
The question is, can I adjust something to make it better?
Mm-hmm.
And so I adjust it.
Mm-hmm.
So for that, I can just speak in a specific way,
mm-hmm.
or I can just not speak at all about it. Which most of the times I choose not to speak about it at all anymore, right? But in that, well, I can talk here, which is what I'm doing now. But in that initial thing, I talk about PE lightly. In fact, the very first time I spoke about PE, I said that I think I said something like it's a measure of your return against your expected return, your return against expected future profits.
Mm-hmm.
And at the time, so I don't remember who said something. It was like, what? They're like, you're not saying the right thing. I know they knew what it was.
Mm-hmm.
But then if you truly understand at your core what PE is, you understand that I did say the right thing. I just said it in a way that regular people can understand.
What I say in the book? It said. It's funny. Also, the book say what we say, except
Because
for
you understand what it is, so you understand what the book is saying. Yeah.
It's funny. I don't hear the time thing often. But
I mentioned the last.
I read books and don't see it, but sure. But it's PE is not mathematically with we can't separate math from real life. So mathematically, PE is not what this is versus that. What this company's PE is versus its industry. That doesn't define the thing by itself. The thing by itself is defined as how much of the profits you are buying, or you are paying for the profits in a company. Or the relationship between the profits and the share price.
And the share price at the point you're buying
and then it can come. The comparison comes after you define what PE is.
Exactly.
You can't compare. You can't use a comparison as a definition.
Exactly. PE is a starting point. But anybody who come grow would have heard me say that. Yeah, PE is not the be all and end all, but it's a starting point.
Yeah.
And it's a good starting point. And that's just speaking
it's not
generally.
An ending point.
Exactly.
It ends as who get make more profit, PE go change, PE go down. Yeah. So that's the end.
So let me play devil's advocate a little and say what the usual thing is said, which is that you're not supposed to really compare across industries. So you made the example before of a financial company versus a distributor. And why can't you compare them based on PE? And what's the argument I'm supposed to make against this? The argument is that, how they make money is different. So I don't...
But it doesn't change the fact that end of the day, the bottom line is the bottom line.
True. I think the real thing is like people expect us just to say something all the time. Which
by rote.
In some way, by rote. Because in some ways it should be obvious to you. PE is this cool, but that's not a be all and end all. The second step is that you go forth and know how this company makes money. It's something we said earlier in the podcast. Yeah. We said long time that you need to know how the company actually makes money, which is where the difference between industries is shown, right? That's where the difference in industry is shown, because the idea is that how NCB make money is different from how Wisynco make money. And also how the market reacts to financial companies is different from how the market reacts to manufacturing companies, right?
The joke.
Which is known because like in Jamaica for a long time and still in some way banking, financial companies were just seen lower. They actually have lower PEs than
It's funny to me.
You
know what's funny?
Why?
Because the trust we have in our financial companies to make more money.
Yes.
To me, that if you trust a company to make more money, then that's you saying, let me buy it on a higher PE. Because the time to return will be shortened. Because the premium you pay on the price will be shortened over time. Because, could I buy a PE at 18, but look more, my PE is 12.
Exactly.
Because I expect this. So we have a strong expectancy for the financial services industry to do better.
Yes.
But we don't trade it up.
Or we don't trade it that way.
We don't trade it a higher PE. PE is low, which low PE is, I expect that the profit will be stable or reducing.
Yes, that's right. That's right.
Because either that or the price, earnings just come in and boy knock. But I'm not talking about that.
Yeah, the piece. But and to clear it up in case we didn't say it before, and people by now expect it should know. If you don't know PEs and you lost, I mean, check the show notes or just Google it. But it means the
price to earnings ratio.
Exactly. Literally the price to earnings ratio. It's literally the current price divided by
earnings per
share. The last 12 months earnings per share. Or the last 4 quarters, if you will. So you can't do it on the 1 quarter.
But you know what's funny?
So lower is usually considered to be better in air quotes, and larger is considered to be worse in air quotes. But we're breaking it down now to say that larger is usually saying that I expect more for this company. Because the price will spike based on expectations. Just like junior market companies tend to have such high PEs. Because people expect them to be growing rapid profit.
So, and tax break, they can know. They're know more visible. They can get more, as they say, get more money, so they can pressure the thing there. Their competitors in certain ways. But what's funny, within industry, so I don't think people believe in them things. They believe it or they believe it wrongly. Within industries, companies in industries are different. Barita and NCB money very differently.
Yeah.
So comparing Barita's
But-
PE to NCB's PE is almost folly.
That is something that nobody talks about.
Mhm.
Yeah. If it's wrong to compare like a NCB to a Wisynco
So-
or NCB to a Fontana, right?
Barita represents a small amount of the business lines of NCB,
Exactly.
and they within that their products are different. NCB cross sell they put their thing that they across the group. In banking they can easily go across the thing there. MCB cap. Barita have an NCB cap. Barita sells things very differently with the unit trust or the way they think the minimum balance, the minimum investment they need to start Barita versus NCB.
Mhm. The customer bases
Because
are different.
Very different.
I mean, the things that happen within
Mhm.
NCB group, there is cap market, which is the real money.
And cap markets feed off the rest of
Yeah.
NCB group. By
In fact,
deals.
NCB has now switched because now a heavy part of the real money is going to be insurance
Mhm.
across the
Yes.
region, right?
Uh-huh.
So again, they'll switch. So do you stop
You know,
using
laughing
PE
at?
then?
Tangent, going right back. NCB going into insurance heavily. Sagicor, we're going back.
Yeah.
Competing more directly with Sagicor.
Yeah, right. And not just locally. The war gone. The war
Yeah.
gone.
Or gone
outside of the-
serious, man.
Yeah,
But yeah,
yeah.
back. So companies within industry do make money differently. When you're going to tell me, say, Lastly and Wisynco are directly comparable.
Well, I mean, we think they are, but if you go
If
deeper,
you go deeper,
you can
look
say that
at-
maybe they're well, no. Why would you say that? Because at the end of the day, they're both heavy distributors.
both do heavy distributors. Wisynco as a manufacturing component,
Mhm.
and Wisynco the way they buy in the way with their acquire business like distribution lines where they
Mhm.
invest in the company they're distributing for, so they get a share of profit.
It's very different.
And look at the margins on Wisynco, which compared to
Well, not Last D. To be
Last-
fair, Last D and
Last D and Last
Wisynco,
M.
they're in. Well, don't link the two
Yeah,
because
don't
the
link
two aren't
Yeah,
truly
truly,
linked.
yeah.
In the
Mhm.
they're linked in our minds.
Mhm.
Yeah, right. Because
Yeah,
they're
yeah,
not
I
the
know,
Lasco
yeah, man.
group
They're
of
not the Lasco
companies,
group of
right?
companies.
They're the
But
Lasco
what I'm saying,
affiliated
why
companies.
Last D and Last M's integration versus Wisynco integration. Wisynco to me as a clean on this integration because you can see it in the margins.
Yeah, well, Wisynco
Never-
is like Last D and Last M in one.
Mhm.
Yeah, and and bigger, obviously.
Yeah.
but
The way they do business is quite different.
yeah, that's a very 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 funny thing.
So yeah, so there's no. I don't want to get too technical on this one,
Mm-hmm.
but the
It's
average.
kind of a technical point. I think maybe people are either bored or interested, but talk.
not
is-
that one, no man. This
Coming point,
The coming
okay.
point can get heavy technical. Industry averages, PE averages. Why I don't like to use them.
It's backward looking. You did
It's-
admit that you hate any
mhm.
backward looking
Yeah.
measure, and you must because it's the past.
Yeah, and you're looking at all right. So
SOS's
In the-
backward looking thing
Mhm.
doesn't show any reflection of the Seek book
mhm.
sales. that
Barita
they've
used to
been
have a
doing.
heavy PE, like way high,
Yeah.
way before the acquisition. But Barita's PE was being compared to the industry, which was crazy low. It was around industry PE was around 12. They were at Barita PE was way high, right?
Mm-hmm.
But when we do averages, we take all 5 companies let's say it's 5 companies in the financial service industry.
Mm-hmm.
We take all 5 of them, take the PEs, add them together and divide it by 5.
Ah,
So
they
that
didn't weight it.
there's
okay.
no weighting. So the thing is now is that if you say all right, Barita PE needs to go closer to the industry. So sell Barita because the PE needs to go closer to I understand if you sell Barita because PE high.
Mm-hmm.
And that's when you decide that you have a baseline of what a high PE is and low PE is
Mm-hmm.
without comparison. But if your comparison is on the average, so average is 12, right? And you say Barita should be sold down, so his PE is around a PE of 12. If Barita's PE is at 80 and everything together adds up to and divide by the weight average is 12,
Mm-hmm.
if Barita's PE moves down, then the industry average changes.
Yeah.
So if you're trying to match the average, if they're bouncing around,
Mm-hmm.
well, so when something moves, then the average changes. So if you're trying to match, if you do that to if you're trying to reach a point, where everybody's PE is on the industry average
Yes.
PE, then you have to decide what is a reasonable PE separate from comparison for the industry average.
There we
Like if
go.
you say everybody must be 12 because average is 12, then you say everybody would have to be at 12.
Exactly.
We made the average 12, which would you saying the industry PE
Mm-hmm.
should be 12. So the PE of every financial service company should be 12. That's you saying you're okay with a PE of 12 without comparison.
I get you, which is madness.
But even though you're trying to go around we have an okay level of PE.
Mm-hmm. But we don't, do we?
We
That's
don't
a
really.
funny thing.
We
That's
don't
a
really.
funny thing,
yeah,
but nobody says
nobody
it
says
anymore.
it. But the thing is, if you're going to rely on average to tell you what that is, then you're saying you have an okay level of PE. So if you're trying to not say it by saying you have an average,
Yeah.
then in reality you're saying the average is saying
That
okay
is
level of
what is
PE.
an okay level of PE. Yeah, I get it. Because you're saying that element that I see why you say there's some technicality in there.
Mhm.
Because you're saying that the element that is being measured and then measured and compared against something, the against is also included in it. So
Yeah.
in this case, it'd be at the time when Barita had the heavy PE, the 80
Mhm.
yard, you would have been saying, well, the average is blah, blah, blah.
Average is
Which
12,
why-
so around 12.
But you're saying, listen, this number is included in that 12.
Mhm.
So if you really want to do it, back it out. And if you're backing it out, you're saying that there's another number that you have
Yeah.
in your mind that's okay. So just say what the
Just-
number is, which
mhm.
is why I am very honest. Again, I grow. People getting a whole heap of grow on the podcast for
Mhm.
free. I grow. I said to people that the industry, even though they don't like to admit it,
Mhm.
has always said that an okay PE is about 12.
in 12 to
to about-
15 in thing there.
Yeah, 12 to 15, 12 to 18.
In
roughly.
aluminum market.
Yeah, no,
Mhm.
12 to 18 is an okay PE.
Okay
That's what
PE.
I'm always
Yes,
say.
yeah.
And then when junior market got more and more popular, when the junior market happened and then got more and more popular, they started saying, but on the junior market, multiples of 20 odd are okay.
Mhm.
Now things are really askew and I don't hear nobody talking
Nobody
about it and nobody saying anything. I want to show you something funny. As of today, if you're looking at averages, the main market, the JC's main market PE is actually higher than the junior market PE.
Mm.
I don't hear nobody talking about it. I mean, I could be wrong. If I'm wrong, I'm wrong.
Mhm.
The main market PE as of today, this is November 11th, Monday, November 11th, we record this. The main market PE is 30.82.
Mhm.
The junior market PE is currently, I remember we expect junior market to have the higher PE
Mhm.
because that's where the aggressive growth is
Aggressive
expected
growth
to come
is.
from. Junior market PE is actually 28.27
Mhm.
times, right? It's supposed to say times, so you get it, or 2x, whatever. So the overall average market PE is 29.57
Mhm.
right now. And up to, I can go back and find tweets where people are telling me, say, they're too high. The junior
Mhm.
market, them, by junior market companies, them have multiples up,
Mhm.
all 19, 20, and you
You
don't
tell me the whole
understand.
market is overvalued.
Look at it now.
Mhm.
The entire market currently is 29.57, but that's a good question. Do you think does that mean that the market is overvalued currently?
I don't think so. And again, remember, we don't buy the market. We buy individual
we buy
stocks.
companies.
We buy companies in the market.
But that's a question that I think is a natural point that should
Mhm.
come up, because I think people say, okay, so if you think, if you say 12 to 18 is what the industry used to consider
Mhm.
normal, and the current industry average is 29,
Mhm. So what's
way
happening?
ahead. So does that mean that the market is overvalued? Is that signs of a bubble that
Mhm.
could pop?
No, I don't think so.
Why not?
Because things are still growing so earnings are still growing.
Well, the bubble grow until it stops grow.
Yeah, true.
Well, earnings are still
Earnings
growing.
are
You're
still
right.
growing.
That's
So
right.
earnings
Profits
will
are
move.
still going
Yes,
up.
the profit.
Yeah.
Then I'm talking about thing there, about people that talk about an American market. So I work at houses. I interact with a lot of people that work at houses,
Mhm.
and I hear this a lot
What's that?
about the thing there, about the U.S. market doing, U.S. market not using PE and
What?
debunked by
Oh,
people,
well.
debunked by people who actually invest in U.S. market, who actually have invested. And
everybody
people,
uses
if you
PE.
pay attention to the U.S. market to some level, you hear PE.
Yeah.
Cool. But I've never seen a sheet out here, I said the other day, that compares the total earnings of the market over time
Mm-hmm.
to the total price of the market over time.
Oh, so you've never seen a PE chart, like a
PE
broken down PE chart.
Exactly. So I also have a chart that say, earnings are high while the prices are low, which means, hey, the prices should be going up to earnings, you know? Or I've never seen something that shows a movement of earnings against the
So
prices.
you haven't seen a true average.
I've never seen that.
Yeah.
But
yeah.
even though we talk about the US market has that for, I can find that on every
single
listing
day.
company
Every single day.
and for the whole market, they track that every single day.
Mhm.
I don't get it for myself, but I've never seen it
I might
from
do it for
anybody in
myself.
anybody in the industry. So
Yeah.
it's interesting that you talk about what US market do, but you're not really doing what the US market do.
I think at some point, you can hear a tired, so I've stopped arguing. I
Mhm.
just start working with the people I work with. And the truth is, when you stop paying attention to the negative, the positive takes over and it make a whole heap of sense.
Yeah, definitely.
So for me, No, I just more interested in like how many more people I can help and what else I can do. And the and of course the market side, investing side. I mean, you're still looking for picks, still looking for things that you like, still looking for things that can afford us, not just the money but the feeling, because the feeling is more important. Of picking it, getting it right, and going ahead.
Well, sometimes I even care about the money, you know.
Sometimes I do. Yeah, I just want to see it. And I say, yo, there's a gap there.
I watch my percentages more than I watch the actual money I'm making in the market.
Yeah.
Other day was thing that even the other day I was making my big spend, and you have to remind me that I, actually have money for that.
Yeah.
'Cause I was looking at my percent, I never actually look at boy, it makes
The
some
dollar
money
figure.
from this
Yeah.
Uh-huh.
I tell you all the time, I say it all the time to people that, yo, if you invest in it, you make it. Invested is not this race. I'm not one of them people telling people about, yo, buy something and put it on for 43 years or 20 years or 10 years.
You make some money, bro.
Yeah, I'm not saying if that's your plan, that's your plan. If that's what you're looking for, that's what you're looking for.
Why I did buy spending, because it helped my productivity. But
Yeah, true. But make the excuse for yourself, whatever the excuse is, and then spend a little bit of money. Nothing truly ties you to it. Like when you do something investing, and it helps you in the real world, and it helps you monetarily in the real world. Yeah, man, that's the only reason, that's the only purpose of money.
Yeah.
You get the money, spend some on it, man. Make
imagine you
it,
reach
if that's your goal.
use it. Imagine you start at $1 million and you reach 500 million in a couple of years. Not couple, but a good amount of years, right? And you just never spend that money. You not reach it.
Yeah.
Just have a big...
You just have the money.
You have a big inheritance for whoever get it, you know?
Oh, can you imagine that? Can you imagine you make all of this and then just dead? What's the point? What is
so even
the point,
though I'm frugal with actually spending money, you have to take money out of the market.
Yeah, you have to. You should. Fruits of your labors. Yeah.
But my route is delay gratification. So I know where I want to reach.
Always, of course.
Until then.
Yeah. But the truth is, as we progress, we change and we grow more and more.
Point on the US market where I was talking about where I want to reach. Basically, I did mention on there, I never see that chart yet out there. What I do like about where we're reaching for sophisticated markets, we have more
locally,
more locally. We have more reporting. We have more people talking about market. We're on a podcast talking about our journey on the market and our thoughts or insight on the market. We have Kalila launching a whole show where she talks about the shows. Talk about it.
Money Mondays and taking stock.
Talking about the market. In the US, yes, US is the benchmark for developed markets right now, sure. But in the US, you have a lot of reporting on the market. You have people pushing to the public unbiased, real information on the market. Bloomberg put in a whole video. I watched a whole video today from Bloomberg on WeWork and the fall of WeWork.
And they don't have to worry.
They don't have to worry.
They don't have to worry about certain things.
And because this is general market commentary, we're talking about what's happening on the market.
That's right.
The people on the market, the companies on the market, and people in them. So I really like that where the demand is there for something like that. Because if anything, it pushes Jamaica forward. Because as we talk about Jamaica democratizing the market, the investment field. Today, you still have people left out of it. Because you have things there, people investing, but now you have way more people investing. So more people are paying attention. So the fact that people will want to consume something like that, it's saying a lot to me. My barber.
Yeah.
Tell me, say, sister, work at within the JSC group. I don't want to load up nothing. Okay. Within the JSC group, and she been telling him to invest, and him go invest in the week and I make a good money. And him say, wait there. And him change him whole mindset and him business and everything based on just looking at market. So now him sitting in the chair and say, boy, then I read some free information I get off of you and you talk about it. And say, boy, we can't charge feet. So might as well we talk about it.
Exactly.
So my barber is talking about investing. Everybody talking about investing.
And it changing the entire culture and people making money.
Yeah.
And money, we act like we forget that money change people's lives.
And I thought barbers don't, a lot of people in Jamaica don't understand how much money they have. Yes.
Financial
taxi,
illiteracy.
Barber, they have good cash flow. And if you check the net amount of money they have at the end of the month, because a lot of them aren't taxed they aren't taxed unless they're doing something through the bank or whatever, right? Which a lot of them don't. Make better money than people sit on behind a desk every day.
Oh, people don't know that.
People don't know that. They look down on the barber.
Yo, let me show you. Finish your point and then I'll say something.
Big up my barber. Because that man know himself. Like I don't think he fully understood, but that man is like a really smart guy. Like, I've been trimming with him from a small. He was in like his low teens high teens at the time when he was trimming me. So he probably just done high school or whatever. But he can tell you one of the people he want to drive because man go to university, you know. Said himself, he was come from country, come Kingston, live with him auntie while him go on work him thing. And I say he wasn't making much where he was before because he was in apprenticeship. And then him started him own thing, branch out. And the man taking money, said himself go university. Go learn business.
Wow.
Did a business thing there at UCC. And then here he's barbering and him doing thing proper. I think I mentioned before that him have a thing there now. He has the thing from NCB, the mobile ATM, mobile arm thing there.
Quisk. Not Quisk?
No, man, not Quisk. Where I can think there.
Oh, you mean
mobile point of sale.
Point of sale system.
Yeah.
Yes.
I work on the.
I've seen a couple of people
work
with
on
those
the phone
actually.
system.
Yeah.
Man comes and say, yo, I see a thing there every day. Him clients every day. Him work out. Him out working in thing that working clients that in industry. Like not financial industry, but to them at a desk every day and get them money at their bank account. Yeah. And all of us pay him in cash because I know say it. When work done, I will go into him. We have to stop at the ATM. So him say, oh, you know what sense? Here what?
Start our card.
And me the only man in place with the card.
So you don't say everything run through him. I hope him charging people for money.
No, the thing is, I don't think the people aren't doing it at all through him. They just them look at it because I mentioned he said, oh, so thing then out of what I'm saying. He said like him now do that, man. So I think everybody is frowning on him doing that as it they don't think it's a forward move, but
they don't think him allowing people to pay by card is a forward move?
Brother.
Well, they're about to learn.
But I can tell him no business. Like, just inherent understanding of business.
Of value.
When he moved,
that's what it is.
He was at a good place before where I think the place looked nice and posh. But he said he was paying a low rental fee for his booth.
Mm-hmm.
But the owner say, oh, bill gone up. Her bills for operating the place gone up. So I must say, we have to pay waste on market. Let's charge everybody in, so nobody here will mind paying an extra to cover the bill. And I'm sure the bill is not that much more.
Yeah. So like, in other words, raise the rate.
Raise the rates.
Raise the rate.
And say,
he asked for his landlord to raise the rent.
Good space, but landlord never take it. She was fed up with it and she said, no, but to me, that man no business.
Yeah.
If your customer is telling you, charge me more.
Exactly. Yeah.
Yeah. So he moved out. He's in the same area, but he moved to the front. And when he came, he put up a price sign on the services he offers and the prices for them. The rest of the people in the barber shop look around. The other people that work there.
Yeah.
And them say he's more expensive than them. And they thought they would lose business to him.
Even though he was more expensive.
More expensive.
Because them know what's up.
Him, money come through same way to tell the man them say, we're going to raise the price too.
Look at that.
This man in here making
X
the same traffic me I make.
Yeah. Or less traffic. Less traffic because you make more profit per person.
But them say that if a man can come in that don't know any of the barbers in here, he will look around and he'll see your sign and say, that's the price I trimming.
Yeah.
I'm not going to ask you your price comes to the price I trimming up there. So.
Yeah.
I'm going to go to this youth because the price over him place. You're not going to go in a place and say, him charge 1,000 for trimming. How much you charge? Now I go say $1,000 for trim. So
everybody, because him show what's possible.
So everybody say, let me raise the price too, because the same business not going to change.
Well, on the flip side though, is he a good barber?
He's a great barber.
He's a great barber. That's the thing. The quality have to be there. If you can charge, right? The quality have to be there.
Yeah, man. So you can, to a point where, they raise their prices with him. They're the same price range. And they know it don't make sense to drop back.
Yeah, you can.
Because in the market, if him raising price, my price raise too, because he might be signed.
Who wants to make less money, but them also know that at this point now them have to compete on quality.
Quality.
That's where it is.
He's the convenience now with the card.
Yeah, in the far head. Shout out to Baba.
Big up Dan,
If not on Twitter, if you forget a post.
He's on IG.
When place there? Boss man.
Hagley Park Plaza, right out the front there. So.
Right at the front.
Right at the front. Hagley Park Road right there. So right. Hagley Park Plaza right at the corner, but at the front.
Okay.
So
But
Big up Brandon. Big up Brandon, man. You understand business.
And understanding business is the key to do any of these things.
Yep.
I'd asked a couple of questions on Twitter. I know we're talking for a long time, so I'll throw in some things, but I'd asked on Twitter if anybody had any questions for us. People had a couple of questions.
Yeah, we should probably go back to the question block from the last time too.
Well, maybe it's another episode because I don't do the work behind us asking
this
question. So, one, we'll talk about the hottest thing in the market because we're recording this close to when it happened. The hotter than a cup of coffee, the latte.
Oh, latte talk. Yeah.
Big up
Chris Williams.
Big up the latte boss, Chris Williams.
Yeah, man.
I don't know why people are so angry, and it's not that I'm not aware of the whole.
I don't want people to try to frame it as you be insensitive because people try to frame it that way.
People always frame things that way, but if you follow me, all right, maybe you just start following me, so you don't. If you follow me, last year, maybe I get cussed off because I was a person on Twitter saying that housing is inordinately expensive in Jamaica for a regular person. If you go back even further, there are tweets of me saying things like, I find it insulting that if we go back, people can see the older tweets that I've done. I've always been on housing in Jamaica. It's something I've cared about. I saw a tweet the other day a retweet from I think 8 years ago where I saying I'll never have a mortgage. I don't want to have a mortgage. I don't plan to have a mortgage. Funny how that kind of shift now in terms of I said with some caveats. And the caveat is not that I want a mortgage. The caveat is me saying, I mean, at this level, if you don't want a mortgage, but you do want to buy a house, you have to buy the house cash, right? But at this point where I am now in my financial sense, there's no way I'm taking up $30 million and buying a house. Right? I can't do it. I physically can't do it. So I would take the mortgage and the investment have to just simply pay the mortgage. Yeah. So and I don't consider that having a mortgage. Yeah. If my investment pays for something for me, I didn't pay for it. Yeah. Shout out to Cygnus. Cygnus dropped a nice dividend with it. I flew back to Jamaica first class and the Cygnus dividend was more than the cost.
I don't pick up mine yet, actually.
Oh, you actually get the check?
I don't check. I need to go find out where that is. I didn't sign the mandate where my account is, so I need to go sort that out.
People, if you're investing, make
dividend
sure you talk to your broker.
Guys, yeah,
get the dividend mandate. So you don't have to get a check. You don't have to go nowhere. Make it just, the dividend just show up in your bank account or your brokerage account. Yeah. That's the way to do it. But big up Cygnus for that one.
You're on your first class trip.
Yeah, boy, them pay for it. Thank you, Cygnus. Shout out for that. And American Airlines. So, yeah. Well, just Cygnus. Big up Cygnus. Big up Cygnus for that. But, I don't consider those claims valid, but I understand it's people in them heat them say anything and you're being insensitive. One, I can't speak for Chris Williams.
What I think was wrong was the calculation of the
latte business.
Two lattes a month, 2 lattes a day, $1,000 a latte wouldn't be $130,000 a month.
How much would it be?
2,000 times.
You're assuming that they drink it every work day or every day?
Every day, 2,000 times 30.
31. Get the money to it. Yeah, 30.
That's not
$60,000 a month, which is half of a cheap mortgage. So for a year, that's $720,000 for the year.
You're not paying the $130,000 with that to pay halfway, almost halfway. Sure.
Somebody tell me once, say a rough calculation for a mortgage is about 2% per month.
Well, he gave a price for the mortgage of $130,000 because the price is your thing there.
Yeah, it was a specific thing. Yeah,
would be $130,000. So it wouldn't come to that. So understand if you say, boy, you're much wrong on that one, isn't it?
Yeah, but
the people were upset about that. The team said that, but I think what framed them being upset about that was that he was tying it to middle class.
The middle class comment hurt people, and the latte thing bothered people. The middle class comment hurt people, and apparently it really bothered them because he said, "We, like us middle class, we in the middle class."
Jamaica have a very wide middle class.
Yeah. All right. So I made a tweet after that saying that the scary thing might be that he's not being wrong. I'm jumping into the joke. I'm like, hey guys, here's a scary idea. Maybe he's not wrong. Maybe he really is middle class. And if he's middle class, what the hell are we?
No, that's lower middle class. Upper middle class.
Some people got it, some people never get it. Some people, I'm sure, vex and sad, still not getting it. But let me talk straight and I tell you what I honestly think. All right. I personally believe so. I don't know Chris Williams. I can't say I've never met him. I did meet him at Kalila Singh. Yeah. Shake him, man. Cool guy. I don't know him to talk. He's not my friend. I don't know him like that. But I know, him presence in the industry. He's proven, proven. So he made this comment and I saw it and I said, okay, let me tell you what I honestly think. One, is he middle class? I don't know the man money like that. But if we're going to work with the Jamaican way where we look on people and just out of the ear judge what their money is, out of the blue, let's play that Jamaican game that we can all play. He works at Proven. He's the CEO of Proven. Peter Bunting owns Proven. Peter Bunting is considered a money man in Jamaica. Generally, you know, we'll ask a control person who isn't here, who isn't involved in investing. So, Bam, just off the top of your head, Bam, or producer, off the top of your head, who you think is richer? Chris Williams, who runs Proven Investment, he's the CEO, or Peter Bunting, who is like
a large shareholder.
He owns. All right, Bunting money up. People know that in Jamaica, right? He himself has spoken about bills that he's paid for large organizations out of his pocket. So, the money up. If you are Chris Williams, you understand money, and you have seen people like Peter Bunting's money. And hold on, here's the thing. I'm not shading anybody, but Peter Bunting own how much approval?
Off top of my head, I think 15%.
15, not 50, not 50. I think about 1.5. Could be wrong. We'll get it right. You check the show notes, or if you're not in the show notes, go on jamstockx.com and check out the top 10 shareholders for Proven JA, Proven Investments Limited. And I do believe that Mr. Bunting is Bunting a doctor? Is he Dr. Bunting? Actually?
I don't know.
You don't know. You don't sound like you care either.
I don't.
All right, but I mean, Mr. Bunting, if he owns it, he's not like 100% owner. He's not 80% owner. So, in fact, I will check for the people so that we're not saying anything incorrect on the podcast.
Quarterly, bro.
I was going to look at the quarterly, but I say, let me give something that people can look at and understand with them listening to the podcast and going in. So I'm going to look at the annual. So the top 10 shareholders, the top 10 owners have Proven. Of course, Mr. Bunting is one of the largest owners.
Not even 15.
He owns, according to their 2018 annual results, 2019 annual report, sorry, he owns 4.8% of Proven. Now, there's also Nika Limited. I don't know how much that is, who that is, but is that something that you'd consider before? So Chris Williams is considered in Jamaican terms to be rich, but not as rich as Peter Bunting. Peter Bunting owns 5, according to this. So I'm sure maybe he has another company, and that maybe it's on there. But at the end of the day, this is what we can see that he owns. Since we're playing that Jamaican game, we try and watch our guess a pocket, right? So if he owns less than 5% of it, and Chris Williams is not as rich as Peter Bunting.
He's the owner, his company owner.
Think about that. Where's Peter Bunting then? If Chris Williams is not middle class, you say he's rich. What is Peter Bunting? And Peter Bunting only owns 5% of it.
Yeah.
If Peter Bunting only owns 5% of it, Leachin own how much percent of NCB? And NCB is much huger than that, right?
And he owns much more than 5%.
And a whole heap of people in NCB top 10, them NCB shares in the top 10 are worth more than all of Proven. Well, all of Proven, I don't know if that math is right, but maybe. Yeah, definitely more than all of these people. And those people wouldn't necessarily consider them as rich as Leachin, but would consider them richer than Peter Bunting, just based on what we can actually see. So we're not guessing people money here. We're seeing how much them publicly own and multiplying that under them names. So we see the money them have. If those people are richer than somebody that we consider to be super rich, and then somebody considered to be super rich, which is Peter Bunting, as a company, and one of his employees, his top employee, star employee, Chris Williams, says, middle class like me. Maybe he really is middle class because he knows the depths of riches that are ahead of him.
When I hear things like this, I think I said it earlier, I actually want people to start investing and to be informed with it, because you see a lot of the money in Jamaica. Because you see where people own things. You see who own what. You see where the money is. Jamaica has a huge wealth gap.
Yep.
The middle class is stretched because the upper class and the
lower class is so far apart.
So lower class is large, but in terms of amount of wealth they have compared to the middle class, it's very different. And then the comparison to the upper class, middle class, there's a big gap between the middle class and upper class.
Yep.
So there's a big gap in each of them, and there's a wide middle class.
it's hard. There's just no going around it. And then here's something that compounds that makes that even harder. The truth is we have been financially illiterate for a long time as a people. So we don't actually know what the hell middle class is. What middle class is in Jamaica and the start of in Jamaica is only for Jamaica. Yeah. A middle class person from America comes to Jamaica and they're rich.
Rich, balling.
Yeah. They're rich. All they're doing is rich. They're not really rich.
I hate to cross borders.
You hate to cross borders, but you have to because that's what we're comparing against.
Yeah, sure.
And we can say maybe he was doing internationally. If you want to go on the completely like world scale, so say what is middle class worldwide, that can be interesting. But what I don't know what to say other than the man might have seen enough and known enough to know that he's actually middle class. Assuming that he wasn't being tongue in cheek, which I think he was.
He probably was, but in his space.
In his space, he's definitely middle class.
And not even in his space. Not even that. In his space, he sees a lot of incomes. He sees a lot of money. I know which space I work in. You see how you can get a good gauge on how amount of money people have in Jamaica. A lot more people have money. A lot more people have a lot more money than generally think they do.
Yes, and what people think of as money is not always what money is. Yeah. And there are people who just have always been traditionally rich because maybe they inherited, they come from rich families, whatever, blah blah blah. But they're not actually cash rich.
Yeah, cash rich. Yeah. They just have the family company.
Yeah. And they have assets to lean against it, so don't knock the assets.
Yeah, definitely.
On
they
the
have
flip side,
protection, but yeah. So I think we have a poor understanding of what money is. Well, next one. On this point on.
Yeah, I just big up the latte boss. I thought it was funny. I thought it was a marketing move. In terms of marketing
I was
moves,
working hard, but I was laughing. Me and my boss were laughing at the reactions. Because the memes that were being made of were hilarious, to be honest.
Oh yeah. Oh God. The memes. And then the names. So that's another question I was asked. My name with regards to that whole thing, which is I mentioned. So I had changed my name to
Latte God.
Latte. Latte God, and I changed again to something else. And I changed. I don't know what it was.
Two Latte.
Something else, and I last one, which is what it still is. Although I soon change it back. I've never changed my name before. So this is the
I used to be a serial name changer before I actually
put up your
got
proper
more
name.
serious with my Twitter.
So I changed my name.
My Twitter was more about me joking around and things than anything else.
Mine too.
But I got a little bit serious about investing in things because actually I love it, but I didn't talk about it with as much people as I want to talk about it with. So
now
this is me opening up.
Get ready for the DMs.
Trust me, I get them. But I choose what I answer.
Yeah, well, it can be stressful. I don't think people know that.
Oh no, it's very stressful,
It
bro.
can be stressful. It can be draining.
I won't answer if you shot at me asking what to buy if this is a good buy, because I'm not qualified to give that response,
and it doesn't help the person asking.
It doesn't help you.
Yeah.
And if I was qualified, then I would certainly be paid for it because that would be my job. So I don't think anybody wants. If you think that's bad, then I don't think anybody wants to be told to provide a service that they provide professionally for free. Next.
That's it. Yeah. So I stopped that. I wanted to wrap up the middle class thing because there's a global middle class calculator. There's an article that I saw somebody tweeted out, and I think them telling them don't want to stress either. So I won't shout out the person. But this person has told me specifically, I said to them, and they said specifically they don't want the stress. And don't want nobody giving them no hard time because I'm investing. But the title article is where do you fit on the global income spectrum? I'll read the first line from it, which is that by 2020, half of the world's population is expected to fall in the global middle class, according to data from the Brookings Institution in America. Anyway, the important thing about the article, and it's definitely in the show notes, is that there's a calculator. So you can put in how many people live in your house. So I put 1 for me. And you tell which country you're in. And it tells, and then you put in how much money you make for a year in US dollars. So I just passed Trinidad and Tobago. Definitely Jamaica is on it. Jamaica, thank you. And have a household income of good. All right. So the article has a calculator in it, so you can put in how many people live in your household. So I have 1 person in mind, and just do it for me. And you have a household income of, let's say somebody about 4 million. Let's say somebody's nicely paid and they're single, right? So I say $35,000 US a year. and it tells you if you fall above or below the global middle class. So according to this, if you make more than $35,000 a year and you live in a single person living in Jamaica, and you make more than $35,000 a year, you are above the global middle class. Your income, you're in the, according to this calculator.
Oh, it uses real income and real.
Yeah.
Oh,
yeah.
that's actually I read that.
So it says a $35,000 income in Jamaica has enough buying power to put you in the 99th percentile globally. That means that you're richer than 99% of the people
In the world,
Yeah, based on what this
based on your real income versus real expenditure.
Yeah. But I mean that's almost $5 million Jamaican dollars a year in terms of income, right? So let's look at. I'm sure people want to see something cheaper. Let me do it at 2 million Jamaican a year. What rate you want to use? Let me say the rate of fly. I'm going to do it at 140. All right, so 14,285. Let's say 14,500. So if you live in Jamaica and your salary is 14,500, which is you fall in the global middle class. So I think the latte boss might know that, which is my new name, that it's too latte to apologize because all the people will apologize, because I can tell you something. If you make $2 million a year in Jamaica, you can't afford a mortgage if you're paying for anything else. Literally anything else. If you pay your phone bill, you can't afford a mortgage. You have the mortgage, not in a nice enough house, whatever. Let me not say that. We tend to be very Kingston oriented. Because you can get a nice piece of land, you can get a nice house outside of Kingston. Yeah.
And if anything, we need more of that development moving outside of Kingston.
Yes.
Yo, I know you have the same thought. Drive around Portmore. Portmore is primed for.
I'm not even going to talk about that.
Portmore is primed for real estate development and commercial development.
You know what I think Randy said last time was here? So sometimes we just don't say something until after we take a position.
Okay.
I'd say don't worry. But I am agreeing with you. Yeah. I didn't even want to go into no details. Right, sorry, I know people don't like that. I'll go back to the global middle class thing, guys. Check the show notes. You will see it there. It's a Washington Post article. It has a calculator in it. I might tweet it out too. So look out to see if you're in the middle class you fall and how it works. It's an interesting article also. Shout out to the person who shared it to me. She knows herself. Who shared it with me. Another question, yes.
Yeah,
let me give you another question because we've been talking for a while. I think somebody wants us to comment on this article that was written today. I was not the person who wrote the article. For people asking how to invest that sugar daddy money. Again, I was not the person who wrote this article.
Yourself. Buy some stocks. All right. So I haven't read the article, but guess that's from the headline. It's what you need to do. You get the money.
Yeah.
Yeah. If the money can stretch beyond your need, your immediate need.
Yeah.
Of like you need to eat food, you need to thing there, and if the money can put you in the place where you want to be comfortable, you do your nails and whatever, so you can track it. Your sugar daddy happy.
Yeah.
The rest of that money, go invest it, because you need to reach a point where your sugar daddy is a choice. And if it was a choice at the start, then I'm not. Then that conversation wasn't. That point was not for you. But reach that point where you're fully comfortable in yourself. You don't need it.
Yeah, man.
You're cool with where you are. You're cool with who you are. You're cool with who you are financially. So invest that money there. Do well. Like make some real moves with that money.
Yeah, that's money that's not yours. Wow. Imagine that somebody's giving you money, you can do whatever you want with it. I know people do that, you know. All
right, so my girlfriend is looking for a platonic sugar mama for me.
Oh, you are funny. I thought you were going to go with it.
Yeah, so
she can't take that stress.
Platonic sugar mama. So if anybody out there wants to mind me, so I can help pay for things for my girlfriend, that's fine. Like, hit me up. That's a platonic for a reason.
Yeah, no, so she thinks, so which big one you think I take her? Good money. Then you go gym all the time.
Nah, I've been in the gym now a while, sir.
Yeah.
It's quite a while. Alex here.
Big up Alex. And big up Monk Fitness.
Oh yeah, big up Mark and big up Alex and Mark. Really good things in that space.
Yeah, really good things in that space. But you think that this woman will take her hard-earned money and give you spend it off on a young girl, and she don't get nothing else. What are you going to give her for that? Dear Lord, I know children listen to this podcast. Right, so let me manage it. But tell me, what are you going to give her for that? What do you think she's going to want for that? You going to carry her for dinner?
No, man, I can't talk about stocks.
Okay.
So
That's a good deal, I would think.
Me try help you sort out where your headspace is, where you want to invest and things.
What you say?
And you make some more money, you can help me, man, and take
And
care of my girlfriend.
Well, everybody live
totally
happy.
happy.
Everybody live.
But platonic only, I'm very committed.
Wow. Well, I'm looking for the same thing, but not platonic, guys. Feel free to send the DMs asking about things other than stocks. Good Lord.
Boy, you know, in Jamaican man say anything they outlawed, you might have 5 girls get up and say, oh, Randy, what do you mean you're not platonic? What do you mean not platonic?
So here are the headlines of the article. Fewer we use more investments, start a business, ask for gifts. And that's GIFTS. Ask for gifts. And rated. Let me tell you the first line from this thing. Whoever wrote this really, and again, I'm not the person who wrote it. Sis, don't ask for KFC or Burger King. Ask him to pay real bills. Do you have a budget? Wow. Do you have a budget? This was in the Observer. Do you have a budget?
If you starish, but cool.
if you do, then get your sugar daddy to offset your ex in the Observer.
It makes sense. That's a good one, bro.
Wow. I'm not saying it's not good advice.
Yeah. Like, you have that bill, like you don't have to pay anymore because sugar daddy. Do it, girl.
Wow.
Makes sense.
Wow.
Because any money you're not spending is more money to your future. So work it.
Offset your expenses. Money that you have spent, save. Well, guys, don't save. Invest.
Invest.
Yeah. Use his connections. Chances are an elderly man with his money has plenty of connections and you can smooth him over to use a few of these to help you. Wow.
It's wild. But yeah, invest. If you're doing it, just do it.
Do it, yeah. Wherever you get money from, yeah.
Make it work for you. Make your money work for you.
Yeah. Invest in the stock market. The JSE is the number 1 stock market in the world. Yeah. That's not a joke thing. Mm-hmm. That's not a joke thing.
No? Big up.
Yeah, Chris Berry, I saw big up Chris from UE on Twitter, who had...
Is that Chris Berry?
No, that is not Chris Berry.
Yeah,
let's be clear. But there's a good thing he said that to people might have said that, right?
Yeah,
but that's not Chris Berry. But he had put some notes from what Mayberry's live forum was.
Mm-hmm. Oh yeah.
And
you were talking about Gary Pearce?
Yeah, and the things that Gary had said and Chris had said, because I think it's both of them.
I only saw Gary. I only saw when you said Gary. I didn't watch it. I was very busy that day.
Okay. So some of the things were really, really good tips. And one of the points he made was the fact that, it's not a joke thing to say that we have the number 1 stock market in the world. That's not a light thing. And to do it more than once, that's not a light thing. Yeah. Consistently. And you have less than 100 listed companies still. That's not
Jamaican a donate here.
Yeah. So I feel justified when I hear things like that, when I see things like that, other people saying it. I know, say, yeah. But I wasn't out of my mind with what I saw. It's actually something sensible.
Yeah.
So, yeah, big up the people I just mentioned. And guys, however you get your money, I don't care how you get your money, but however you get your money, invest it. Don't save it. Use it to invest. Do you know that that's one of JSC's actual mandates? That they've always had, one of their mandates is that they
bring
want
down the savings and investing higher.
They want to allow greater savings options for Jamaicans, and more lucrative.
Mm-hmm.
Yeah, I felt so good seeing that. I remember I have an article, I link it in the show notes also, that says you shouldn't save, you should invest. You look at the year I wrote that article, and I can tell you, I put it up. I think I put up at least a year or 2 after I actually wrote it. Mm-hmm. So it's a long time I have these ideas that people should hear. But anyway, these stores start for a long time. We give them some quick shots since we're halfway through half earning season. I'll ask one more Twitter question, and then I will touch 2 Twitter little things that I saw just now. One of the things somebody asked was how do we expect, like the person put the failed, but I don't think there was any failure. I think they chose not to do it. Mm-hmm. So I said put off the Sagicor deal with Scotia Life, where they're taking Scotia's insurance companies. Mm-hmm. How will that affect the deal?
So all right, so it won't affect the deal per se, because I've not seen where JMB has affect the acquisition of the Sagicor shares by JMB. That's what you're asking, right? So how will it affect Sagicor and JMB?
I guess.
So for both of them, it's a lost opportunity cost. They had an industry player leaving industry and giving them their piece of the market. Mm-hmm. So that helps their organic growth, and it helps by inorganic growth, where they get new customers, they get a new portfolio, and they have a new touch point to attract customers. So that's an opportunity that they don't have anymore.
Yeah.
In terms of affecting current business, it doesn't directly affect them more than the competitor is still there. The competitor can still attract some of the market.
Yeah.
So that's where it's affected. But the current numbers for the company are not actually affected.
Yeah.
The current numbers are still on. If you believe in them, they will be on track for what they are now. So that's my 2 cents on where that affects them. JMB will be buying into Sagicor Financial, which is still in talks with Scotia outside of Jamaica to acquire those insurance business. But the Sagicor Group, Jamaica.
I don't know if they are.
Yeah, man. They said thing there.
They still still continue at the.
So the only part is that Scotia Jamaica. Scotia Jamaica's insurance isn't being sold to Sagicor Jamaica's insurance. But Sagicor Financial is still talking to the rest of some Caribbean countries about the acquisition of the insurance business.
Okay.
So they're still exposed so JMB is still exposed from the Sagicor Financial side. But the exposure that Sagicor Financial got from Sagicor Jamaica is no longer there.
I got you. I get you. So the actual question was from somebody named at Andrew FRZT. It's Andrew.
Big up for asking questions.
Yeah. The actual question was, how do you think the partially failed Scotia insurance deal will affect Sagicor and JMB's bottom line, and how do you think the market will respond?
Affect their bottom line. I don't think their bottom line.
So I think
affected.
that question to me seems to smack of the usual thing where people think that JMB is buying Sagicor Jamaica. They're not. They're buying Sagicor Financial,
which owns
all of the Sagicors in the region
and majority of Sagicor Jamaica.
Yeah. And majority of Sagicor, which I share with regular shareholders.
Regular shareholders in Jamaica. You can go buy some.
And Panjam.
Yeah. Yeah.
Panjam owns 33% tied. Yeah. I hope we answered the question there. Chris Omuyi had a question about the latte scandal. My name, we covered that. So we'll change it back.
I find it funny. His name is Chris Omuyi.
Yeah.
Shares the name of the
person I'm asking about. Yeah. Persons. Chris seems to be a very popular name in investment circles. 2, brief discussion in middle class. We did that already. Look, we're ahead of the game and the sugar daddy money. Chris, you get all your questions answered. Big up. Somebody asked if we could tackle something that David tweeted.
Big up, David.
David said that NCB has indirect ownership of Guardian Life Limited in Jamaica through their Guardian TT holding. I wouldn't call it indirect. They own Guardian Life Limited in Jamaica. Yeah. That's it. Yeah.
Well, no, I see why I said indirect.
They own 62% of it.
So I see why I said, but if we
said it at the start. Once you pass 50, you're a subsidiary.
So you're a part of NCB Group.
Yeah.
So if anything, we are big NCB piece. So we own Guardian indirectly through NCB.
The other part of the tweet, he said, Guardian Life is the provider of Medicus, and Sagicor Jamaica is the provider of Sagicor Health Insurance, and Sagicor Jamaica is owned by Sagicor Financial Corporation, which is being acquired by Allianvest. JMB is going to acquire 22% in Allianvest. Proven J owns 20% of JMB GLJA. Connect the dots and you'll see the nature of how owning one firm can give you exposure to so much more. I thought it was going somewhere, David.
Yeah, me too.
Okay. Well, I mean, it was a separate thing, I guess. He was just putting it for people.
Speaking on it.
Yeah, I get it. Okay, so she is asking us, can the fall of one tumble the others as well, or is the stakes in each one not big enough to do that?
Tumble?
Nice enough question. Yeah, people always worry about failure. It's a Jamaican thing. The first thing we worry about is the failure.
It's the good things that make you wonder.
How it go bad. Because for years we get beaten, my lord.
Proven.
Exactly how it works. Proven own 20% of JMB, which is going to own, let's say it's in the future. So JMB owns 22% of Sagicor Financial Group,
which owns
Sagicor Jamaica, which runs Medicus, I guess.
So if Sagicor Jamaica fails, then JMB.
Sorry, they do not own Medicus. You see, I'm mixing brands. I don't get in trouble.
Guardian owns Medicus. Yeah.
Medicus is a Guardian product. Sagicor Health has whatever their system is. They have their own system.
So I think, if Sagicor Jamaica were to fail, how big is you have to look at how big is Sagicor Jamaica within the Sagicor Financial Group, the cross Caribbean entity.
Yeah. Well, I mean,
So will the Jamaican operations, the failure of Jamaican operations, cause the failure of the Caribbean
Overall
operation? If you think that can happen,
yeah.
then Sagicor Jamaica, Sagicor Financial Group fails, and for it to affect 22% of JMB, JMB's holding, JMB owns 22% of them. So the sharing associate,
Yeah, it's actually a complicated one.
It's complicated,
It's not
yeah.
complicated in terms of the whole, because I can see the answer. All right. Just think of it simply. Sagicor Jamaica fail, it's going to hit Panjam and Sagicor Financial
Financial.
Corporation, right? It's also going to, if it hits Sagicor Financial, it's going to hit JMB,
JMB,
which is going to hit
it's
Proven,
proven.
because Proven owns 5% of the same thing by virtue of holding 22%
Yeah.
of JMB.
But can the failure of Sagicor
Do that?
group, can it ruin JMB?
Ruin completely, no, but I
No.
think it'll just be rough.
It'd be rough
I think
because you spend how much money on it.
It's here the problem.
But
Most people
that's
don't
a-
really understand what failure
It's a big
actually
snowball,
is.
bro.
We never is a most people don't really understand what failure is. But can things like that happen? Yeah, sure. If Guardian were to fail, would it hit NCB heavily? Yeah. But remember, the NCB got to where they were going without
Guardian. So
Yeah.
it would affect them
Well,
because they spend money on it.
they had 32% of Guardian
Mhm.
for a little
But
while.
it affects them because they spend money on it, and then that's
And it's them.
That's a cost that they lose.
Yeah, and it's them. We have to consider that it is actually
So-
them. So it's
yeah.
part of they would
Yeah.
fail.
Yeah. But with it fail, the whole group, the thing is, these are very diversified companies.
Yeah, man. And that sort of thing is a big question. to
Sagicor
ask.
Jamaica failing,
How would they fail?
how would they feel?
Yeah,
Sure.
there's
And
not
then
enough information to truly
If
say.
it fails in a vacuum, so it fails while the rest of Sagicor Financial is living and going strong, then Sagicor Financial has something to fall back on more than just Sagicor.
You know
Jamaica.
what? Let's save this for another episode, and we can dig into it, because a whole heap of things would I get, like the indices would I get, like you know, if NCB were I can't even say if NCB,
No,
if NCB were to fail, the
I'm even thinking about
company's
indices
done.
because you're talking about how it will tumble down and
No,
affect
I
everybody
think
else.
she just wants to say the others, and I don't think she truly got it, and I don't think
When she listens to this podcast, she can clarify. So we can.
but I
go.
don't think she knows either. Cause think about it. I've mapped some of these scenarios in terms of failure, when especially when I was looking at how the US fail. That's how I think about. We think about the US failure, and we think about FinSac. Most people don't even really understand local FinSac. That story isn't told because too many toes to step on.
Yeah,
And
See,
the US,
I don't think I'm properly informed about that.
yeah, nobody ever talks really about it, because the people who involved in it, anybody who made the good decisions or the bad decisions, they're still alive and still around, and they're
Big
not
up
interested.
NCB.
Yeah, big up NCB for coming through it stronger.
Good
So I
CEO,
think-
good owner.
I think it falls from not really understanding what the failure is. And in the US system, what happened is that a lot of other industries were tagged into these things because they were safe. So if we look on it from a safety perspective, if Guardian were to fail, it would hit NCB heavily, which means every pension would have dropped down, right? Every pension fund would have get a whole heap of value hit. And if NCB dropped, we know the local index would have dropped. It's such a big scenario that I think we should tackle it another episode. But it's not to worry about right now. Yeah.
Affect the.
Yeah, so
attack the snowball effect that she probably sees happening, but probably
Yeah.
isn't that great of a snowball.
Oh, it might be a big snowball, but they would have to kind of tighten up her question to show that.
But I was thinking of each thing failing in a vacuum, and then how would they affect the other thing? So
Yeah.
Sagicor failed and isn't tied to the failure of any other thing. The Sagicor just did bad business,
Oh,
and then
so in terms of the company, bottom line
company,
financials,
and then it just start ruining with how it affects Sagicor Financial. Then Sagicor Financial fail. I don't think it will be that snowball effect that happens.
Yeah, I see Chris from you asked another question, but I don't know.
You get too much question to the boss.
Yeah, man, that's too much question, and it not really.
Give other people a chance. We can
Yeah,
answer another
and it's
time
that question Chris is supposed to know better. Chris, if you want to know what a list, Chris and anybody listen, if you want to know what a listed company actually does, check note one of their audited financials. They have to tell you how they make money and what they actually do.
And for a deeper dig, just try to interact with the company. For a deeper dig, try to interact with the company. So you know, say Grace, what them sell, and you can break down which parts of the food industry them in, what them in Western Union do. NCB, you can find out their products because they're trying to sell them to you. So you have to look beyond. You have to look beyond just the note. Yes, you have to look at note one because that frames it, but you have to look beyond note one. every minute, Salada come up with not every minute, but say Salada come up with a new product.
New product or a new line.
Grace, them new thing there. The mix drink, the food drink, the Grace food drink that's reminiscent of the Lasco food drink.
I got you.
Yeah, so you have new business lines, you have to know what they actually do, what they're putting out into the space. So you can run their name iCool, him look at iCool and say, boy, iCool booming and buy Lasco. So he knows what they were doing before, and he knows that there's a new business line and how well is it doing. So that's the second step. What they do and how well these things what they do. So how you know what they do? Note one, and then you go deeper than that. What they actually do under the things they say they do.
Exactly. Well, I don't want to kill too much questions because I know people have been listening for a long time. Yeah, we don't have to touch on it. So somebody asked this one. I'll jump from here and we'll just maybe touch on a couple of actual hard stocks, and then we'll call it an evening or a day or a afternoon whenever you listen to this. How is the China-America trade war impacting Jamaica? And if it's not, do you see it affecting us in the future? This is based on comments made last week on Jamaica and China relationship. I asked him to show me what that relationship was, and he linked me to an article from Nationwide where they said the Chinese government was condemning the U.S. military officials' comment because the U.S. military official, I think, was saying something about... In other words, they're saying, like, the U.S. military official isn't very happy with the Chinese influence in the region, and the fact that they are in supposedly a trade war currently. Quick answer, my lord, is if you hear it on the news, you don't really have to worry about it. Right? There is no real trade war because is what America is going to argue with its factory.
Yeah, that's
the factory needs America, and America needs the factory.
America, look at how much America takes China's goods, and look at the fact that despite the trade war, nobody has held fast to a proper trade war. They can see where, sometimes them sanction this and then they take it off. Sometimes we're blocking it and then come off the block. And it's up and down. So is the actual trade war out there blocking out? We're not taking anything from China. That would seriously hurt America's economy.
Yeah.
And Apple is what? The largest listed company?
I think they said that.
And Apple sells iPhone. It was a big thing. Apple sold iPhones in China for the first time, iPhone C. I think they do have production. They have some things that are coming out of China. It'll be very weird if they don't, to be honest, because it's Apple and it's such a big company. And what China does for the manufacturing in the world. And I think even other day they had something saying where Apple got approval to have some manufacturing line staying. Ryan can correct me on that if I'm wrong. But basically, as Randy said, China is a factory of things.
That's where everything goes.
It makes sense. We have cheap labor over there, and labor in the US, the price of labor is too high for companies to sensibly move. If we move, then the bottom line get hit same time. The fact that they're moving itself and then they're paying the workers that you're moving it to. That's the whole reason America's factory is in China. Because it's cheap over there.
Exactly.
And China has gotten so big on the international stage in what they're putting out more than just manufacturing. They actually have a large stock exchange, the companies are getting so big. The companies are producing, the companies are pushing to the world. America, they kind of do have to take a lot of that. So I don't think there's actually a proper trade war where we're done with China.
They can't be. And already by the time we're saying this, it has already started ramping down.
Oh yeah, they're having talks.
They must, and
talks.
Don't worry about that, my lad. Don't worry about that. That's not something to worry about.
Only worry if you see where your opportunity, you're in a business where your business is contingent on the trade war happening.
Yeah, and even then I would tell you, do not bank on that. Don't put money on that.
If anything, do it short term and do it for the time you think makes sense. So even if you think it's the last 3 months, do it for 2 months.
Yeah, check when the US elections are.
Gosh.
Yeah. Just I'll leave it there.
Yeah,
I'll leave it there. I'm going to touch some stocks now. We'll touch some stocks before we wrap, because we're talking for a while. Half earnings season, like we said, because a couple of things are out. We spoke about MDS already. What else? You have anything at the top of your head?
We mentioned Signals, so I'm a good outlook for Signals because of bad year last year. Expect a good year coming in.
Berta dropped some results that were not that hot.
I didn't look on Berta, but I suspect that they wouldn't be so hot.
Well, let me tell you the exact numbers. My God. 9 months results, right?
Mm-hmm.
For the period ended September 30th. And they are, revenue is at, for the quarter, 534.2 million versus 607.8 million. The same period last year. So revenue has fallen for them. The profit before tax, in fact, no, straight net profit. Net profit is 8.9. Call it 9. Last year, Q3,
Mm-hmm.
last year it was 8,970,000. And this year it's 7,385,000.
It's wild to me a company like Berger is hitting those numbers.
What do you mean in terms of profit?
So the profit numbers. Yeah.
Tiny though.
Yeah.
But that's for a quarter.
But compared to MDS, it's looking close.
Looking close. Even
Revenue figure and
that's a nice put. I never thought of that. Compared to MDS, it might look nice. Oh yes, the MDS and Berger might be about the same size.
Yeah.
And they shouldn't be, right?
Yeah, it shouldn't be. We can't even revenue.
Yeah, they're
I
really
think MDS made more revenue this quarter. For 534, Berger you said, man? MDS made 560.
Wow.
565.
Wow. MDS is a junior market company.
Mm-hmm. And in our construction boom.
Wow.
I love that. I'm always sarcastic when I mention that one, by the way.
Yeah,
we have a construction boom, but people really like to
people
put it in poor context, I think.
Yeah, I like that put that you're fine, you know. I never thought of it versus MDS, and it's MDS 6 months.
Mm-hmm.
But you say it's on the quarter to quarter.
Quarter to quarter, man.
All right, so MDS for the quarter made 565 million. You're right, and Berger 534.2 million. Wow.
Mm-hmm.
Wow. You see what I want every company list? Profit, as we said, it dropped from 8.97 million to 7.39 million, which means that
20% less than last year.
They're roughly 20. No, 20, roughly 18 thereabouts. 17, 18 thereabouts. Wow, 18% drop in profit. The profit before tax is interesting because same-ish ratio, 14 million last year, and this year 9.2.
Also, was there a tax credit? What kind of tax numbers?
Yeah, the tax seems weird, yeah?
Mm-hmm. So I think something happened with the taxes, either a tax write-off or a tax credit.
Yeah,
that caused them to record. If they didn't have that, then the profit would be quite a bit lower. Because if 14 to or the tax thing there, it's a big company though, so a lot of things happen in that tax line. But the tax ratio, the tax rate was lower this quarter than last quarter. So I have to go check what actually caused that.
And they said that revenue for the period was mainly impacted by the adverse weather conditions experienced in the quarter. I hear them and Carib Cement said the same thing.
Yeah.
Brother, the quarter ended September 30th. In October, the rain ended gone.
There was some rain going on in September too, but some rain going on in September, man.
Heavy rain?
Yeah, because I remember being annoyed by it.
Are you sure it was during September and not October?
Yeah, because
I mean, if I'm wrong,
it's memory, but my memory stuck with certain things, so let me not hold on to that one.
I just remember it that way.
Check it. I mean,
that rain business is a poor excuse in my view. Poor excuse. But hey,
I think Carib Cement have a better excuse than Berger to tell you so.
You think so? Because I don't.
Why?
Wait, let me not say that. Let's see what Carib Cement.
Carib Cement, I think it was a movement of stock.
That's what they said?
Yeah, because people not buying and they said there was a delay. Was it they that said it? But somebody was trying to explain to me. Or was it? I saw it somewhere that basically there's a delay in stock, delay in movement of stock, but because of the nature of the business that they sell to, that they will be picked up in the coming quarter. But that isn't anything there. So maybe.
I don't know. Well, first, let me tell you what their drop was, because Carib Cement got
Got
a
heavy hit.
heavy
Loving
hit.
it.
Yeah. They moved from revenue of 4.46 billion for the 3 months, July to September, to 2018. For the same period, July to September 2019, 4.38. So close, but
Yeah,
less,
so revenue
but
did-
close.
the
So the
revenue
revenue
didn't
dipped, right? And the profit, they made profit last year this time of 305 million. And right now, the man they make profit of 76.8 million. That is a heck of a drop.
But look at Carib Cement's price, the nature of the revenue drop. Well, not revenue drop. Look at the gross profit difference.
The operating profit.
Oh my
The
gross.
gross profit, they don't tell you. Am I looking at the wrong thing? Oh, yeah, gross profit here. EBIT before everything. And they have a note
It's
beside it.
basically a gross profit. So they do
yeah,
explain
yeah.
that. They explain the thing there. That's why I want
I know. Sorry, you not caught my eye. They have manpower restructuring costs on this. We haven't seen that in a while.
yeah.
They said that was done.
It's done, but I think it's a recurring thing. It's a weird expense.
No.
Even one year I saw where one quarter where it was on, and then in the corresponding quarter they removed it. So across there was no manpower in the quarter. So the report before showed it, and then it didn't factor in. So I think they wrote off that expense. That's some weird.
It's weird. Do you know what it is?
No.
They never. I can't say they never.
but
I have never seen them truly explain it properly.
Yeah.
In my view, it's always is a very difficult thing.
Wait, what? Give me the gross profit numbers though.
Oh, the gross profit number. Sorry, 1.27 billion this year versus 1.55 last.
You see that hit? Look at the thing there now. Look at the.
Oh, it's inventory. So you're saying there's something in inventory.
Not only look at the thing there. Look at the expenses now. So they have the expense breakdown on here. For the gross profit breakdown. Over here, man.
Yeah, it's down here. There we go.
And you can see where two expenses spiked. Despite all the other expenses looking better, I think
Equipment hire
Equipment
spiked.
hire spiked.
Yeah, from 133 million to 325.3 million. But cement transport, marketing, and selling costs fell. Other operating expenses, I don't like that.
I hate that.
I don't like that.
Give me a full breakdown and tell me other.
Yeah, other operating expenses jumped from 213.9 million
Especially
to
more
420
double.
million. That is a big jump.
And you can see
And
how
it's
much
it's
it
under
affected the thing there.
something.
And that was a real kicker in the thing there, because they go from revenue fell, and then expenses moving that way, increasing that way, just cascade down to the bottom line in a bad way.
Yeah, but overall expenses last year versus this year, 2.9 versus 3.1. But the difference is 200 million. Oh, yeah.
So the revenue will drop and then the expenses go up. So, whoops.
Wow. 300 million. Wow. So Carib Cement going through it too. Heavily overvalued right now, right?
No, I know.
Overvalued, not undervalued.
And
you think they're
PE?
undervalued? Based on PE is what I mean, yeah. And of course, we know the industry, so it's them alone. Well, yeah, the PE is 24.
Yeah.
At $59. The PE is 24 times. 24.05 times. Okay.
Oh, yeah, $59?
Right now, they are at 59.
My gosh.
They are not at $59. Sorry.
Okay.
That is my average price for them. At $77.
Okay.
Sorry. At $77. Woo. They're at 24. They're PE of 24 times. When we were talking about PE earlier, I meant to say that I have always said, I tweeted it long ago, that the case could be made for a PE of 20. Years ago, I remember saying that I can say a case for a PE of 20. But I don't know if I ever tweeted it or if I said it or what. I know I said it.
I've been there when you said it.
Yeah. I've been saying it for a long time that I think Jamaica is right for a PE of 20. Now with the average JSE PE being 29.5, maybe they're willing to say that a good PE range is now 20 to 30. I mean, in America, PE is crazy, but again, earnings over there mean a whole lot more. So people are willing to pay a lot more for earnings, which is what PE shows you, how much people pay for it, right? Anyway, we do have to draw that back. So Cable and Wireless going, no, Cable and Wireless, although they should be
Carib
going
Cement
through
going
it.
through
Carib
it, yeah.
Cement going through it was what those two other companies. Blue Power don't drop yet. What do you think about Lumber Company? Not supposed to drop
Lumber
soon.
strong, man. Lumber should look strong.
Yeah. I was looking at
Especially with how I like the whole deal around Blue Power.
Blue Power should look strong.
Yeah.
But we can talk about that another one because we're talking to the people a long time now and I'm not giving them a 3-hour podcast.
Yeah.
Even I not going to do that. So we said Berger. Now go, let me just look and see what else came
Fosterich
out. What you looked at? You liked Fosterich?
No.
No? Why not?
I don't like how the expenses moved in relation to the profit, the revenue move. So admin expenses were way up, and finance costs it was up by 8 million, I think. But the finance costs are typically low. I won't say low, but it's always you have to be relative with something like that. So I think they moved by 8 million when they had 9 million regular before. So that's almost a double. But for the new profit, for the new revenue they're making, the admin costs flew, and I think the reasons they gave, I didn't.
You didn't like the reasons they
didn't
gave?
sit well with me.
What are the reasons
Something
they
about
gave?
it. The reason they gave, they said they made some celebration for the 25th year anniversary, and some new HR component for the thing there. Just open it, bro.
Open what?
They Fosterich numbers.
I wanted to look at something else while you were talking because I know the Fosterich. I actually opened them already. They're in one of these tabs. So keep talking until I find back which tab.
Yeah. So yeah, relative to the thing there, but admin expense was the bigger move to me relative to the increase in revenue.
Okay.
So finance costs moving in that way, I don't think it was heavy. So I think the proper financing for the new revenue you're taking in, sure, but the admin expense move cut into it. It could be new staffing, but I'll read it. Just read it.
Yeah, well, the problem is I haven't gotten to go through these numbers myself yet. So
Yeah,
we haven't done a
probably.
proper earnings season. Yeah, we're going to go through it, guys. So look forward to get like a proper earnings season episode from us where we go through like the proper earnings that we have. If we can get the right people here, we'll get the right people here. If we can get the right people on board, we'll get the right people on board. If not, here, Dana and I talk about it. And that one, I can tell you from now, prepare for it to be long because we will be going into the companies that we like, the ones that we like and the ones that we want to talk about.
Yeah.
Something good for
Fosterich. Some of the bad ones, though.
Yeah. Well, something good for Fosterich. They did say that they then drop a news release on their
signing for the new warehouse facility
that they're sharing with Grace, GK.
Grace. No,
The GK pension.
they're sharing or
I don't know.
GK pension is financing it.
Oh wow!
Yeah.
So the pensions are unlocking the value locally. They think
that this is GK's first real estate
move.
They said
GK pensions.
GK pensions.
Oh wow! And it's being managed by Latte Gods Proven Wealth Limited. Yeah, I like that. So it's a tripartite thing. Fosterich benefit, pensions benefit through Grace Pensions, Grace Kennedy pension scheme, and investment manager, I'm sure, benefits.
But Proven really likes real estate,
Yeah, they do. They do.
I think they really like.
And coffee.
They have a lot of. A lot of real estate deals. I remember Proven REIT was in the newspaper, not just the other day, but some time ago.
Yeah, they do like real estate. You know
Really
what going
like
to
real
Jamaica already. People really like the
man.
idea of real estate, and the people have the money actually do.
Actually, do
real
it.
estate.
Proven have a bag of money, they can do the real estate thing right.
Yeah, so that's good for Fosterich. Some good news in the future. And that's good for Jamaica because it shows the pensions using the funds that they have for something other than the usual nothing or the usual slow thing or the usual government paper, right? No, this is nice. This is pensions doing something
I like
interesting.
seeing pensions because my pensions exposure is pensions held within the financial sector. So I know where they do the real estate deals. But I couldn't speak to the movement of pensions beyond that. So this is good to see when I say this is the first Grace, a company as big as Grace Pensions going into that. So
that's huge.
Maybe if Grace doing it, it says to me that a lot of smaller pensions might not have been in it.
Or pensions buy all kinds of things that a lot of people don't know. They buy real estate, they buy houses, all kinds of things.
I know where financial sector they buy into those things. They have the biggest pensions, so they buy into those things a lot more than
than other non real estate companies.
Yeah. So those ones are. So you'll have a pension portfolio being for a large company being managed by a real estate by a thing there by a financial sector
company. Yeah. Because I know Sagicor Properties manage that place over in Portmore, where the new theater is. Yeah. I was looking on Kingston Wharves that just dropped also on the 3 months. They're up
and
11%.
11%
on the profit line. Yeah, bottom line up.
Wait, Kingston Wharves moving?
Yeah.
Boy.
9
Kingston
months.
Wharves, I don't know. Please, somebody tell me what we're waiting on for a proper PE evaluation on that. So, as in, what is your expectation of the
stock?
the company?
Uh-huh.
Why we have such a high PE on it?
Oh, so in other words, you're asking why hasn't it corrected as yet?
Why the price don't drop, or why the profit don't reach it yet? Because if we have the price that high, then there must have been some expectation of something going on.
Boy, the price has been that high forever. Eh?
Forever.
Yeah.
From I joined the market, I see KW up there, so with some high PE, and I was like, all right.
Yeah, it's been there forever, and the price has risen, and it stayed there because
it's a company I'm afraid to buy.
Me too. I've never bought it, but I've always watched it. It's
people
one of my
like
lessons.
But
because it's one of the first things people learn. Them come to the market and them go, buy what you know, which is good advice. Buy what you know.
Mm-hmm.
And yeah, guys, you're gonna hear this one with the dogs.
They're weighing in, guys. Yeah, man.
The dog, them hungry.
Yeah.
Anyway, these guys are really hungry. People know it. People know we think of them, know NCB, the bank, and them say, what else? Kingston Wharves? Not the wharf, that. Everything ever come through the wharf. So you must buy it, which I think has sustained it for a long time. Because this is actually a drop in terms of the PE.
But it's more than one time I see buy recommendation go out on Kingston Wharves.
For years, but I don't.
Every minute someone come out and then.
But they can't say they're wrong. Because people that bought it are not buy recommendation at $30, even though it was overvalued.
Yeah,
and then it come all the way up to $57 now, so it's still up. But it was at 70 at one point. No? So this is actually coming down.
I've spoken to people that tell me, say, yeah, man, it's a good one. Big up Gamel, DJ Lengdi. Call him government name. He think that he pointed to show me KW falling when he was falling the other day, and he said he sees a good opportunity where if it's so high so long, he never thought it would stay down. And I think he bought it and he moved back up.
Oh wow!
So yeah,
it went smart.
For a low. It went at a low for
a little while.
Yeah,
and it bounced back up.
52-week low, I think it went to.
What's something else that you think might be at a low right now?
I have to think about that one more than so.
I like that. I think Select F is touching a low. I don't think one mention. I was even going to bother mention that QWI close to there. 106.
106.
Yo. Some people are sad and some people are very, very, very happy. The NAV is a bit higher.
It's actually a joke.
No, that's not a joke. That's a dividend. You remember that thing you said to me once? We won't go into it on this. But you said no about how you can get. Technically, if QWI is paying out X amount of dividends that they definitely get, you are getting because they own. Discount. You're getting a discount on buying X amount of. Dividends from X amount. If the people into dividend investing truly, this should be a great opportunity for you.
But you know why I prefer that for MJE?
Why?
Because MJE has certain stocks that they plan to hold over a long period. So most of their thing there, most of their holdings. So big SVL, the 4 big portfolio companies are a large part of their holdings.
Yes.
Right? So the dividends paid from those companies can be discounted more heavily if MJE's NAV shoots up.
I get you.
Yeah, because if those companies are growing and moving in up, and people not buying MJE, that means the price of those companies are moving, the earnings of those companies are likely moving with it, very likely moving with it, and the dividend payouts will be stronger from those companies into MJE, and MJE can pay a stronger dividend relative to its price. So,
right. Well, the last.
Go and keep MJE at $10, right? When about 13, I buy.
Well, the last NAV value I see for MJE is set November 8th. It was $14.33, and it is currently priced. You can buy it at $11.29. So it is also below its intrinsic valuation, below the NAV anyway. And as I mentioned, MJE, I use that one and wrap up.
Yeah, the results came out.
Yeah, results came out. Well, again, so how much I said it's at? It's at a valuation. It's at a price of $11.29, And I don't know if it have a PE on it. So you'll have to work out if it have a PE on it. But the net book value on that is 1434 according to, now I'm looking at the actual finances. So they have 1434 in their finances as at the end of September 30th. However, their profit...
That sound about right. Compared to the almost $1 billion thing there.
Yeah.
Sure count.
What was their net profit? Net profit was 464 million Jamaican dollars versus 249.5 million Jamaican dollars same period last
Which
year.
one of the portfolio company you think did that after that movement?
That's a great question. I know that in this set of financials, I tell you that their top portfolio item is SVL, which is 53.5%. And then below that is LASEF. Then below that is Carib Cement. Then CPJ. Then Blue Power. Then Derryman. Then Jamaica Broilers. Then JMB Group Limited. Then Wigton. Wigton wasn't always there. So they've taken a position in Wigton. Okay.
But you know, it's only 4 companies move their profit, their bottom line, their net profit.
Their net profit. Only 4 of the...
4 of the companies they hold contribute to their thing there.
Only 4 of the companies
they hold contribute to
the P&L movement, the actual net profit movement, outside of the dividend payments, of course.
Outside dividend payments. So the movement of those, so the FVPL. But yeah, Blue Powell's rise within this quarter. Within the quarter gone. High, it closed. And it started at nice and low.
So only 4 companies moved the P&L. And you know that because it was said in the prospectus.
The prospectus based on how they think there. Based on how they...
What are those 4 companies?
Based on IFRS 9 and how they were speaking about them in the prospectus.
Yes, and those 4 companies
were CPJ, Blue Power, LASEF, and I think I always forget this
Last
one.
D?
No, ROC.
So Last D was one of them?
No.
But they do own Last D.
They own a lot of companies.
That's true, they do own a lot of companies. But it's a matter of what they consider their
portfolio companies.
That is true. That they had taken stakes in, that they had sold down.
They sold down to less than 20%.
Homework for the people.
Yes, check that prospectus. It's a good read.
It is a great read. It really is one of the greatest prospectuses. So net profit, nice, 464 mil from the same period last year, 249 mil. So 86% increase in that. And the share price is still just ignored. So there you go. I hope Chris Perry pay a nice heavy dividend. Speaking of nice heavy dividends, Stanley Mata paid one. We'll wrap it here, guys.
Is that heavy dividend though?
As dividends go. I think it's just that people aren't jumping into it, which I can understand. 2%. Yeah. A heavy dividend is 2%. I mean, a great dividend is 5%, right?
Big up SVL.
Yeah.
Big up Carriers.
Speaking about dividends though, because what they can be good for, here's a little thing that I've not heard many people talk about. Big up Philberg. SOS declared a dividend. They usually declare a dividend later in the year. They did not declare it as late. They declared early, so they're going to do 2. But also, and Philberg pointed this out, that the current dividend is 60% higher than the dividend last year. We haven't seen the numbers from SOS yet.
But you might point to something.
Yeah, hopefully point to the profit being 60% higher.
60% higher
or more.
Or more.
Yeah, who knows?
We'll
Looking forward to that.
Yeah.
So guys, I hope it don't bore you on this one. It went really, 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 really long. Who knows? Maybe we'll split it in 2.
Yeah.
We'll decide then. I hope you weren't bored. I hope the people that listen actually like it. There's a whole lot of gems in this. And look out for the proper. Enough. Too much. So we'll probably bore the hell out of people with this one. No guess, but even better. Because it's me and Dana, we had to get to talk like this. So hope you guys liked it. If you didn't, let us know. If you do let us know. And look out for us next week again. It's been another earnings season. I'm Randy Rowe at RT on Twitter.
I'm Danai at HDanai on Twitter.
And this has been earnings season. Thanks, guys.
Hope you enjoy. Bless up.